Hello, everyone. Welcome to the first episode of Daily Trade Recaps. So basically, every single day now, we're going to be going in depth, in detail about why I take certain trades throughout the day, especially in the first few hours of the day. And I'm going to give you guys my thought process, my reasoning. I'm going to try my best to be as succinct as possible, but I want to jam pack it with as much information as possible. Because it'll help give as much context as possible. So I'm going to try my best, and things are just going to get better as it continues. But yeah, man, I'm excited. So without further ado, let's get started with the video. Okay, so one thing to take into consideration is I'm going to be going over all of these trades, whether they're profitable or not. I'm going to give you guys my exact reasoning for every single trade that we take. So every trade that I share with you guys, I'm going to go in depth, whether it's a victory or not. So yeah, let's get started. So this is, as you guys know, I trade. All right. So as you guys know, generally we only trade the S&P 500, which is the SPY, on a 1 minute time frame. So heading into today, I was saying, so the most important thing in terms of day trading is you need to have a plan based off of the larger time frames. Okay, so say you haven't looked at the market, you haven't day traded in weeks or days, right? What you first want to do is you need to look at the larger time frames. So you first look at the daily time frame, okay? Disregard all of the other drawings and everything. You look at the daily time frame, okay? And in yesterday's video, I was explaining that 447 and 448 were going to be extremely important support levels. Okay, so we obviously opened here at 448, and I was saying that 447 to 448 would be a very important level of support. So what do we do at levels of support? We go long at those levels of support, right? So that is my thought process heading into the day with the SPY, right? The next thing is the dollar. So the dollar is relevant, obviously, because when the dollar is rising, then it is generally bearish for the market. But what I saw was that the dollar was very overextended to the upside, which meant that strength in the dollar was not going to continue in my eyes. And basically, as I just said, if the dollar fell or showed weakness, then that would be good for the overall market. That would mean that support would be held, and that would mean that we should be going long at levels of support. That is my thought process. That is what you need to do basically every day. Of course, obviously, you need to look at the other large stocks. You need to have a good frame of what's going on. But very, very simply, that is a big chunk of basically what we were doing. We obviously also saw the NASDAQ. We also saw the NASDAQ holding above support, and we saw the IWM also holding above support. All of them were above important daily levels of support at the open, right? So now, when we look at this on a 1 minute time frame, we had news at 10 a.m. So every morning, you go to forexfactory.com to look at the important macroeconomic news. When that news occurs during the day, you do not hold on to any short-term positions because they are very, very risky to hold. Okay? So now with that being said, okay, so now you're looking at the chart. All right. We opened at 448.40. Cool. We fell down, and right here, as we fell to 447.50, right at 9:39 a.m., I went long on October 20th calls. So something over a month out, 40 days out, because I knew that the market would bounce off of this setup. How did I know that the market was going to bounce off of this setup? Because 447, especially 447.50, was going to be a very important major level of support. Okay. And more specifically, when you zoom in and you diagnose exactly what is going on this chart, what do we have? We have multiple red candles selling off. So not only did we gap down, okay? So this is important to realize. We gapped down, but then as soon as we opened as well, we also sold off, okay? So I didn't go long anywhere over here. So this was the initial sell-off, okay? So as you can see, we were selling off, we were selling off, we were selling off. This candle at 9:37 a.m. right here held as support because at 9:36 a.m. we made a low, right? At 9:37 a.m. we held support and painted a green candle. So this is very important. We painted a green candle here. And then what ended up happening right afterward? We ended up making a new low. So this is relevant because as a bull, regardless of what trade you're making, right? If you're a bear, you do not go short into extreme weakness. This is the equivalent of very extreme weakness because we ended up making another. So this is what happened, right? Now zooming out, take this into consideration. Number one, we gapped down. Number two, we sold off at the open. Number three, the dollar was overextended to the upside. It looked like it should have pulled back. So if the dollar pulled back, then that would mean that the overall market should bounce, right? And then number four, we ended up making another low right here. We made another low. And number five, this is a major level of support. This happened literally at 447.50. Very important major level of support. So look, if we gap down, so let me, before I go into more detail about this trade, right? Because we gapped down, right? If we had, instead of falling lower like this, if we had risen, right? Then as we got closer to a level of resistance, it would have made a good shorting opportunity, right? That's generally how that works. Because if the initial market, we're gapping down 0.5% overnight, right? The SPY is down whatever overnight, 0.5%. If we get a bounce, the overall momentum of the day is bearish because we gap down. So even on an early morning spike up, you're looking to get short. You're looking to enter short, right? But that's not what happened. The opposite happened. So because the opposite happened, then it was just a matter of finding the right bottom. And the right bottom was once we at 9:36, once we made this low at 9:37, once we started to bounce above that low, then at 9:38, when we made a completely new low, it hurt all of the retail traders trying to go long over here, trying to catch these bottoms. Down here, once it made a completely new low and closed below the prior lows, bulls became frantic, and a lot of people began to be short on the market. Okay, so because a lot of people, so as a retail trader, you have to realize that market makers want you to take the opposite side of the trade as much as possible. So retail traders, right? The average trader, they're going to see, oh, wow, it closed below the low, big red candle, time to go short. Wrong. You do not do that when there's an extreme move to the downside already, when we already gap down, and especially when all of this is happening at a level of support. Okay? Does that make sense? I hope that makes sense. So when they try to make it look exceedingly bearish, that is usually the best time to start leaning long. And basically, because we made this low, and I knew that this weakness was not going to sustain itself. They were not going to reward. So look, another thing is the concept of being late. Okay? So if you were to go short over here, that is the equivalent of being a late bear. Why would market makers want to reward people that are late to the party? Sorry. So they don't want to reward late bears. They don't want to reward late bulls. They want to make it as difficult as possible to catch moves. All right. So they manipulated people into thinking that this was going to continue falling lower. We entered right at 9:39 a.m. And this was, we entered into contracts about 40 days out. This would have been a great scalp to the upside, but the concept still remains, right? This was a great longing opportunity, and the market ended up jumping from 447.50 all the way to 448.50 within a few minutes. So, okay, so that was the first few minutes of the market, the first 15 minutes of the market. I wanted to give you guys like a good understanding of what was going on. Okay. So now, right? Obviously, what is going on? Okay. What is going on right now? All right. So look, as this move happened, you know, we're over here, we're sitting, we're like, oh man, you know, we probably should have entered into 0 DTE instead of a 40 DTE. It is what it is. But now moving forward, what do? You have to adapt to what's going on in the market and make the next best decision. The next best decision is not to try to short into weakness. It is to buy into dips. Okay. So as this big red candle happened, I was explaining that this was not a good shorting opportunity. I wanted to wait until we got to a major level of support. I think I was even saying 447.60, right? Yeah. So I was saying 447.60 was a major level of support. And this zone, right? Because this is initially where we broke out. This is where we had major level of support prior. And that is exactly where the market ended up going down. We ended up falling, making another huge red candle to the downside. This big move to the downside was not going to sustain itself because it was happening after a large move to the upside, especially back into a major level of support. Okay. And we ended up going long at 9:49. So yeah, I think, yeah. We went long at 9:49. As we okay. So let me explain now why we went long at 9:49. All right. So basically, my thought process was, okay, we are going to play alongside the momentum. 447.50 held as support. The 448 level held as support. Cool. All right. We're going to wait for a dip and buy. We didn't buy into this dip. We didn't buy into this dip. We waited for the next lows to occur, and we waited for a green candle. So as this candle appeared at 9:48 a.m., it was not going to sustain itself to the downside. This weakness was not going to sustain itself to the downside. And we were just waiting for a better buying opportunity to, once again, to buy at levels of support. Okay, so what did we do? It came to a level of support. We bought right here. It bounced up. Quick little 20-30% play depending on when you entered. Easy money. And it worked out really, really well. Spectacular. Now, right? So that's basically what ended up happening. We took a nice trade. We're still holding that because it's for October. I really do think that the market does bounce back into OPEX. We'll see what happens. It's a swing, but the concept remains of why I entered into those swings at this moment. And it was the bottom of that of the day at that moment, and it worked out really, really well. And then we just waited for a pullback at level of support, and then we went long again, and it worked out spectacular again. Okay, so that is my thought process for those trades, right? Then of course, you know, we sold, right? And then at 10 a.m. we had news. So I wasn't going to enter into anything a few minutes into news, and especially was not going to be holding on to any short-term contracts during news. All right, so then the ISM news came out, big red candle. The news was bad, right? The numbers were bad, and it ended up falling. So yeah, it ended up falling lower, and I knew that we would end up falling here. I didn't want to go long this entire time. Okay. So yeah, let me explain here. Okay. So what I always say is never. So all right, so check it out. As we made the huge move to the downside, right? After news, right? We made a huge move, multiple weakness red candles, right? I always say never to short the initial drops pop upwards. Never to go short on that. It's usually a really, really good buying opportunity on dips. And if you were scalping, right, we made lows here, never go short. I never, ever, ever go short at levels of resistance on these pops upward, okay? Never. I never do that. I always say to buy dips. After a large move to the downside, you buy dips. You do not go short. So what ended up happening? We came back. So we made a low here at 446.52, right? We ended up retesting 446.61. And then that ended up bouncing, making a new high above these prior highs. And great. It would have been very difficult to catch this short. It's much easier and much safer trade to just go long after a market has made a bottom and after we have an initial move upwards. You wait for dips closer to the low of the day and you go long at those dips, regardless of where they are, regardless of when you would have entered. Never go short. Always just try to buy the dips for a move upwards. Very, very high probability trade. Okay. So we ended up making another low. And all right. So as this happened, right? As we ended up falling lower, right? We fell to this level of support here, right? At 1030. After we initially, had the big drop, we bounced up, we made new lows. When you make new lows, right? Again, what ended up happening? We bounced and we made an initial bounce upwards. This, I did not want to go long because we were way too weak. I had a feeling we were going to drop even lower. And I did not go long here. We ended up going long on weekly contracts expiring next week at 10:53. Purely because we ended up making new lows and this big red candle. So when you have huge, big red candles like this, breaking levels of support, especially zooming out now. So disregard all of this. Imagine the price action has been doing nothing but falling all day, right? We tried to hold this support. It fell. And then we just had a dramatic red candle. Generally, that is a good long opportunity. Generally. But because I wasn't comfortable about getting into 0 DTE contracts, I got into contracts expiring next week to be more safe, to give more time. So we ended up getting these. And, because the contracts didn't really move much to the downside, I didn't really care too much, right? It was more of like a vacation trade. It was very, very comfortable. It was nice. No stress. So basically, so look, we made this initial pop. Weakness like this was not going to sustain itself, in my opinion. I knew that the weakness was not really going to sustain itself, and it was going to give a nice opportunity to basically buy the dip and bounce. Okay, so as we made a new low, I knew that the weakness was not going to sustain itself, and then we made another low after this second low that we made. It's not going to sustain itself. So this was not a long opportunity. This circle right here was a long opportunity. As we made a dramatic, we made two lows afterward. So what I mean by two lows is this was a low because we tried to bounce out of it. And then that failed. We made a completely new low and then we bounced out of this. So we missed this trade. We should have taken this trade here. We should have went long on 0 DTEs on this trade. Solid, would have been a solid, beautiful trade. But, you know, I was you know, busy and doing stuff, whatever. I was just holding on to the 7 DTE contracts, and we ended up bouncing out of this, and then we sold up here for a small profit. I didn't want to hold it anymore. There wasn't any real strength out of the market, and I just didn't want to hold it. I didn't want to lose on a trade for no reason, and we sold out of this, and I was right. You know, obviously the market ended up tumbling afterward, and yeah, so those were the only trades that I took so far today with, you know, within the stream. And I hope you guys enjoyed my thought process as this continues day after day. You know, I think it'll really help give you guys like more insight of why I'm taking these trades, and it'll 100% help you guys with your trading, and that's all I want. So I hope you guys enjoyed, and please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys in a few hours for the market update. All right, so take care. I love you guys. Have a good one.